Taking a look back, Tesla was originally founded by two men named Martin Eberhard and Mark Tarpenning on July 1st, 2003. Martin served as the CEO of the company, while Mark served as the CFO. Their dream was to create a modern technology-based automotive company with a focus on batteries, computer software, and proprietary motors. But while they had high ambitions, something that they didn't have was money. If this was an internet-based company or some sort of app, they may have been able to get away with bootstrapping it. But given that this was an automotive company, that just wasn't gonna fly. So they would set out to raise money almost instantaneously, and they would close their Series A round of funding in February of 2004. They would actually raise a substantial amount of money, coming in at $6.5 million. But almost all of that came from a single individual investor, Elon Musk. According to Elon, he invested $6.35 million and Martin invested $75,000. Some other sources actually report that the initial funding round was worth $7.5 million, and that Compass Technology Partners and a few others threw in the last million. Either way though, Elon was by far the largest investor, and he was far from being done. In the meantime, Martin and Mark were building out the initial Tesla team. The first person that they hired was Ian Wright, and a couple of months later, they would hire J.B. Straubel as CTO. Today, these 5 men are the ones that are credited with founding Tesla. Elon was definitely an involved investor from day one, as he played an active role in the development of the original Tesla Roadster. But he wasn't quite an employee per se, given that he wasn't that involved in the company's daily activities. That didn't really matter though, because by far Elon's largest contribution to Tesla in the early days was capital. And let's just say, he kept the capital flowing. About 2 years after Series A, Elon would lead a Series B funding round that ended up raising $13 million and added Valor Equity Partners to the funding team. And just 4 months after that, Elon would co-lead a Series C funding round that raised $40 million and got many of his tech friends involved in Tesla. This included the co-founders of Google, Sergey Brin and Larry Page, as well as the former president of eBay, Jeff Skoll. Elon would finally round off all the fundraising with a 4th round of funding that raised $45 million. These were all the funding rounds that Elon happily engaged in, but there was actually one more unexpected round of funding. The dark days of 2008 would force Elon to put everything else he had into the company. And by the time the company got to the other side, they had raised a total of $187 million. This marked the end of Elon's personal contributions and VC funding rounds. Since then, Tesla has primarily relied on governments, other car companies, and public investors for capital. And fortunately, none of these have required too much dilution. All of this left Elon with a ginormous 28.4% stake at IPO. Meanwhile, the original founders were essentially diluted into oblivion, especially because they weren't able to contribute much to these funding rounds themselves. Neither Martin nor Mark have ever revealed details regarding their Tesla stake during this time period, but it was likely in the single digits. That's nothing to scoff at though. Even a 5% stake in the company would be worth $34 billion. So how did Martin and Mark go from being future deca billionaires to not even billionaires? Well, that can be explained by the ousting of the founders.
Hi, this is Cayden from VIA Value Investing Academy. Now, thanks for joining another deep dive session about this company. Oh yeah, tonight we're going to talk about this company called Tesla. So before I start, I just want to make sure that the audio and visual is okay, right? I've just shared my slide. If you are able to see my slide right now, and if you are able to hear my voice clearly, is it okay? Just type 1 in the chat so that I'm assured that everything is fine. Okay, usually there's a couple of second delay, but it's okay. So let me just get started right now. But before I start, I just want to give credit to the source of this video for this channel, which is called Elon Musk Life. It's quite interesting. I think they must be really passionate about them. And the number of subscribers that they have is really quite a lot. It's 234K. Wow, so Elon Musk really have huge fans of followers. So let's get started. Now, let me share with you how we sort of wanted to follow this company called Tesla, and it dates way back during the pandemic year, right? That's on the 9th of September 2020. So you can see, yeah, this is the screenshot of my Facebook post. Okay, huh? And then, you see, I'm quite sarcastic, right? I say for the gamblers who speculated on Tesla and psychoing others to do the same, those people buy call options, they might have lost some money. But anyway, let me just share with you the more important context is this part. This part. So during a time which is on the 9th of September 2020, I was looking at the company's PE ratio, right? Now, PE ratio is just a blunt instrument to check whether is the company sort of tend to be overpriced or underpriced. It's a very blunt, it's not an accurate gauge, but when I was looking at PE, the PE was 859. Now, in case some of you who are watching this, you are not like not very familiar with this PE ratio, right? Maybe let me explain what is PE ratio first, then it's more meaningful on subsequent slides. Now, PE is a very common relative valuation ratio where the numerator, right, is actually price per share. Now, price per share, that means the share price that we see that fluctuate every now and then, go up and come down, is called price per share. And then E, right, stands for earnings per share. Okay, slightly technical, so just bear with me, right? Earnings per share. So if let's say PE is 859 in this context, it simply means that the numerator is 859, at the bottom is 1. And if I put a dollar sign over here, right, so what does this mean? Remember the time period for this earnings per share and the price per share, here is per year, which means that if Tesla makes $1 of profits for every share within that year, investors are paying $859. So it's price they pay for every $1 of earnings, which also means since the company only make $1, right, per year, and people are paying 859, so it takes 859 years to break even. So for tech companies, usually the PE is high, on the high side. It could be 100, but 859 is really extraordinarily high. So that was on the 9th of September 2020, and then now you understood the term called PE ratio, right? The higher it is, the more expensive people are really paying. Now, then if you look at the share price over here, right? Okay, I pointed to the share price. Now, share price over here during a time of my post, very close to my post, it was 124, so it was here. So that was the first post that I made. There are actually, in between, there are actually many posts, but I share with you some subsequent posts. Then about 2 months later, which is November, right? The PE went up from 800 plus to 1034. So again, what is it? That means for every dollar of earnings per share that Tesla is making, people are paying $1,034, which means that it takes 1,034 years to break even. So here I'm a bit sarcastic. I wish to see it surpass 5,000. Okay, so that is November. So if I plot a graph again, you can see previously was somewhere around here, right? So because the price, which is the numerator, goes up, so the price per earning, went up. So that is November. Then I continue to track. And this one is the 5th of March 2021. The share price somehow it drops. But PE still quite high, right? Still around the 1,000 zone. So which is a 958. For every dollar, people are paying 958. Versus Apple, right, which is much more cash rich, where the profit is much more predictable. The PE is only a mere 32, which is a fraction of Tesla. So usually the context of PE is you do this kind of relative comparison, but since they are not in the same industry, you can't really compare. But assuming that if they are Apple also sell car, right, if you compare, then Apple, right, will be cheaper than Tesla. Okay, that's how you can use PE, a relative comparison, right? So let's move on. Then the next one, which is 1 year later, 5th of October 2021. I've decided to, together with my ex-staff called Reina, right, on the 11th of October, we decided to talk about Tesla and the EV industry as a whole, because there's so much hype about this company, right? So I think we better look at it from a very analytical, rational way, right? I mean, what makes Tesla such a famous stock that people really like? Now, so here I put, loving Tesla has become so strong that it has become a religion to some people. So actually, at one point in time, I posted that the Tesla PE was quite high, right? Then there's one chap, I also don't know who, right? Went to my post and he cursed at me, so he said quite bad profanities on my status, but I'm okay, right? It's okay. Anyway, there's a freedom of speech, We are not in China, right? So at that point in time, which is on the 5th of October 2021, the share price continued to go up. It was somewhere around here, then it continued to creep up over here, right? So PE dropped slightly, but you're still very high, right? Very high. Now, then, remember I told you we did the YouTube Live? So that was the 2nd November 2021. So we talked about Tesla. We also talked about NIO. Because some people said that NIO is the China Tesla. Yeah, so we did this. And then after we did this, right, coincidentally, the price was at its peak over here. Can you see? From here, right, all the way until here it was peak. So it started off with about 100 bucks, right? So it went up like 3 times, because 4 times actually. So this is about 400. Yeah. So in short, when I started observing this company where the company was overpriced, the price really keep on creeping up. Yeah. But we must understand, remember here there's a short period where the COVID came. There was a short period of a recession, right? So from here to here, it was a bull market. Yeah, anyone who knows nothing about stocks, when they buy stock, they also make money. Yeah, so during the period, it's a period where everyone is a genius. Okay, everyone's a genius, right? And at this point of time, the PE was still quite high. It drops a bit, but it's still quite high at 661. Okay. Then remember, I remember there was one quote that Buffett says, if there is some trend or there's some phenomena, right, that will not last forever, eventually it will come to an end. Okay. So at its peak, right, which the share price was 409, it starts to fall. Right? Now, the reason is quite simple. That there's a bit of human psychology. Now, when the price keep on going up, the expectation of gamblers become higher and higher. Hey, I want you to make more money so that, the share price will go up. Yeah, the expectation become very high, right? And if there are some times, some moment, if the company, which is Tesla, did not meet the expectation, the high expectation of the speculators, right, then they'll say, oh, you not so good. They'll start selling. And then when they start selling, people will start selling. So it's like a vicious cycle, right, where people start dumping their stocks. So right now, the share price has dropped from 409 to 215. So that's about 50% drop. Okay, So the PE right now is really significantly much lower, which is 66, as compared to 1,000. So let's, I'm just going to talk about a bit technical things, right, so that you can really understand this PE. So remember PE, right, like what I've said, is price per share divided by earnings per share. Yeah. So since the PE has dropped such a significant amount from 1,000 to 66, there are only 2 possibilities. Yeah. The first possibility is the price drop so that the PE drop, which is true because the price dropped by half. Okay, so the drop in price contributed to a lowering of the PE. Then the next one is earnings per share, right? Earnings means profit. If you buy 1 share of the company, what's the profit, right? And the thing is, the earnings per share, right, of Tesla also has gone up. So now, for the past 2 years, actually the profit was doing pretty well. Okay, so you have a number numerator which is smaller, and you have the denominator which is higher. That's why the PE drops. Okay, PE drops. So right now it's 66. So what does it mean, right? 66 means 66 divided by 1, right? Yeah, which also means that if you, for every dollar of profit that the company make in 1 year, right, people right now are paying a mere 66, of course, versus 1034. So am I right to say that if you pay 66 for $1 of profit versus 1034 for $1 as profit, at this stage, it appears to be cheaper, right? Yeah, so previously I find it too expensive. So now it's tonight, right? Is this something worth pondering? Can we buy the dip? But before we continue, I just want to let you know that all the research that we have so-called shared tonight are all found in our YouTube channel, which is at youtube.com/Value Investing Academy, right? So I've shown the QR code over here. Now, in case some of you wanted to be notified of any kind of companies that we are looking at, yeah, please feel free to scan this QR code, right? I'm going to release this QR code here for a short while. You just need to pull out your phone, scan, something pop out, and then you just click subscribe. Yeah. So this is like a subscription QR code. So let me just pause here for a short while so that I can check how many people are watching this video. Okay, about 50, right? Now tonight is a bit lesser. Usually we have about maybe 100 plus. Maybe tonight is Friday. Oh. Okay. So of course, the question is, since the share price has dropped and it appears to be significantly cheaper, right, at a P of 66 versus 1,000. So of course now the question is it a good time to buy the dip? is it a good time to invest in Tesla? Because previously it was so expensive. But before that, before I hand over to Hillary, you know this is our protocol, right? So I'm going to talk about the disclaimer first. Disclaimer. So remember, tonight's deep dive series is solely to illustrate the application of value investing, right, methodology to the company called Tesla. So remember, under no circumstances does any information provided in the following case study, which is Tesla, represent a recommendation to buy or sell any stocks. Yeah, because we do not know you see, personally. So we do not take into account your individual characteristic profile or risk appetite or any investor. So remember, let me just jump the gun a bit. So remember, neither My Kinesis Investments Private Limited or Value Investing Academy nor me and Hillary are operated or affiliated with any broker, dealer, or licensed financial advisor. So now we are not licensed by MS to say, hey, buy Tesla. So remember, tonight we're just for education purpose, right? We also enjoy doing this. Okay, so right now what I'm going to do is I'm going to hand over to Hillary, and Hillary is going to go deep dive into this company called Tesla, and then you'll be back to me. Yeah, over to you, Hillary.
Hi, good evening everyone. This is Hillary here. So tonight we'll be doing an updated version of Tesla. So should you wish to watch the more deep dive version of Tesla, you can watch our previous video a few months back did by Reina and also Cayden. But tonight is more like an updated version of Tesla. So without further ado, let's jump in to see whether it's now a good time to invest in Tesla. So based on the latest news, we saw that the Tesla stock falls 5% when they released their latest Q3 results, because their revenue dropped, missed from the analyst expectation, and their EPS, which is the earnings per share that Cayden has tried to explain, they actually beat it. So earnings per share means that for every share that an investor buy, how many earnings can the company generate? So for example, if the EPS, earnings per share, is $10, that means that for every $1 of the share that the investor purchased, the company is able to generate $10 of the earnings. So we see that actually for Q3, they managed to beat the analyst expectation for their EPS. So the next news is that the Tesla cutting down the car prices in China, which caused the Tesla share price to drop down. So this raised up a question that why did the car prices reduced in China will affect Tesla's share price? So with these two news in mind, we decided to deep dive like what happened to Tesla that the share price dropped. So with that, we'll have a quick background check on Tesla again. So it was being established in 2003 by Martin Eberhard and also Mark Tarpenning. Then they named the company after the famous inventor Nikola Tesla. And Elon Musk came on board the next year in 2004 to invest into the company, and then he replaced Martin Eberhard as CEO in 2008. So Tesla manufactures electric vehicles and also solar panels and some energy storage products. And they have a ticker symbol TSLA on NASDAQ. Okay, so where is Tesla located? Currently, the headquarters is located in Austin, Texas, US, where they shift from Palo Alto, California in December 2021. So they have 6 manufacturing facilities. The first one is in Bay Area, which is the famous Fremont manufacturing site. And they are producing these 4 models of the Tesla car, S, X, 3, and Y. And here shows that the latest quarter on the production capacity, it does not mean that every quarter they are producing this much of car. It just means that in this factory, how much cars can the factory produce. And then the next one is at Austin, Texas, where they are producing Model Y and also Cybertruck. So tooling means that the company is actually acquiring the manufacturing parts and also the machine needs to produce this Cybertruck. And in Nevada, they are actually producing the Tesla Semi, which is another form of truck. And also in Shanghai, China, they are producing Model 3 and Model Y. And in Germany, Berlin, which is a newly launched Gigafactory. They are producing Model Y. And they have another factory in New York, which mainly produces the solar products and also energy storage components. So these are the geographical locations of the manufacturing facility of Tesla. So now let's look at what are the products and services that Tesla currently make. So Tesla has two business segments. The first one is automotive and also energy generation and storage. So under automotive, the current cars that are in production are Model S, Model 3, Model X, and also Model Y. So if you notice that under Model S and Model X, there's the word plate. So when I was doing the research, plate actually means that the car can accelerate from 0 to 60 miles per hour under 2 seconds. And when I was reading through some articles, they say that some of the models, which is the plate model, they are able to beat Lamborghini as well. Whether is it true, we'll see. Okay, so they made up the word called sexy. Okay, so now we are curious to know what are the future products that Tesla has in line. So first off is the Tesla Semi. It's currently being produced in Nevada, and then there's articles, there's news says that this truck will be delivered to Pepsi in December 2022. Whether will this come true? Let's wait for the news. And then the next one is Cybertruck. So currently it's at tooling stage in Texas. And then other cars that are in development stage are the second generation Roadster, which is a sports car, and also Robotaxi, where Elon Musk has been throwing hints that he might consider to launch it in 2024. Okay, so other than producing cars, Tesla also offers some other services, such as non-warranty after-sales vehicle services, sales of used vehicles where Tesla owners, they think that they wanted to trade in their car, so the car they can reuse and resell them. And then retail merchandise are such as apparels or some trinkets, and also vehicle insurance. So this is something very interesting where the car owners will be paid premium based on how safe they are driving. So they are using this safety score, which is an AI program to determine how safe is the car or is the car driver driving their cars. So the higher the safety score, the lower the premium they are paying. So they base it on these 5 factors to determine how safe is the driver driving their cars. And also sales by subsidiaries to third-party customers. And now we'll look at the energy and storage business segment. So for energy generation, they have solar roof. So you can see that these roofs are all made by these solar panels. So that means they replace the whole roof and then replace with this material. And then there's another option where the homeowners, they can choose to install solar panels on their existing roof without replacing the whole roof. And since all this energy generation, they can only generate energy when there's sun. So if there's no sun or it's like at night time, how are they going to generate energy to power up their homes? So Tesla comes up with this energy storage solution. So for homes, they have this power wall where how it works is that during the day, the solar panel will generate energy and then they will store the energy into the power wall. And then the power wall, once it's fully charged, then they can power up the homes and also the electric vehicles. And also at night as well. Okay, so for commercial energy, they have this offer called Mega Pack. So this is how it looks like. So this is actually a large-scale energy storage for power grid. So how much can it store the energy? So they can store about 3 megawatt hour of energy per unit. So we are non-electricians, so we are not sure what does this mean. So it actually means that every unit they can power up about 3,600 homes for an hour. So this is what it means. Okay, so right now we'll look at the financials of Tesla. So in 2021, Tesla generated about 53.8 billion from these 3 segments. So automotive generated the most, which is 88%, followed by services and others at 7%, and energy generation and storage at 5%. So we also further break down the automotive, like what is contributing to the automotive revenue. So we can see that almost 94% are coming from automotive sales. Then the other 3% are coming from automotive leasing and also regulatory credits. So here, what does it mean by regulatory credits? So regulatory credits are actually incentives issued by government where they award those automakers who are manufacturing zero carbon emission vehicles. So because Tesla, they are making zero emission vehicles, they get this credit for free. And they can sell this credit to the traditional car makers who cannot meet this target. And in a way that it will able to boost up Tesla's profit. So how much can they boost up the Tesla profit? So we made a chart and also this graph. So we can see that the blue line is referring to the percentage of the regulatory credit against the total revenue, and the red line is against the automotive revenue. So we can see that most of the year it's below 5%, except in 2020 where they boost up to more than 5%. But then the next year in 2021, it managed to come back down. So is this something that investors should worry about? Because in the event that should the government no longer award this regulatory credit and Tesla no longer can sell this credit to the other traditional car makers, it may cause a dent to their profit. But because currently most of the revenue from Tesla is generated from automotive sales, it's not something really concerned, but investors should take note of this. Okay, so from geographical area, we see that almost 45% of Tesla revenue is coming from United States. And then there's this news that comes in where Tesla is cutting down the car prices in China. So why did the car prices cause Tesla share price drop? It's because almost a quarter of the revenue in 2021 comes from China, which makes China the second largest market of Tesla. So now another question comes out is, will the car prices reduction in China affect Tesla's future revenue generation? So right now we'll look at their past 10 years record. So revenue means that the money is generated from normal business operations, where it's calculated as the average sales price times the number of units sold. So we see that from 2012 until 2021, for the past 10 years, the revenue has been going up. But China is the second largest market of Tesla, and they are cutting down the number of prices. In order to maintain the revenue, they need to sell more cars, which bring us to find out how much of cars is being produced and how much cars is being delivered. So vehicle production means that the numbers of cars is being produced, and vehicle delivery is the cars that are sold or delivered to the customers. So let's see the relation between these two. So in the event that if the delivery is more than the production, it means that there are a lot of people wanted to purchase the cars, but the factory is not able to produce the cars in time. So as if that there's a high demand for the vehicles. But in another way that we see, if let's say the production is more than the delivery, that means the factory is able to produce more cars to meet the demand. But then there are lesser cars being delivered to the customers. So there might be an oversupply of vehicles, or can be perceived that there might be a low demand for the vehicles. So now let's look at the numbers. Okay, in annual vehicle production and delivery, we see that year on year it's actually increasing for both production and delivery. And in 2021, in fact, the delivery is slightly more than the production. But in their quarterly results, we see that it's kind of fluctuating. And in Q3, we observe that the delivery is actually lesser than the production. So which is one of the reasons why the investors got a bit concerned about this. But Tesla gave a reply that it was due to the logistic issue that they cannot deliver the cars in time, which caused the numbers to drop. So whether will this continue to happen, we have to look at the next quarter report. Next, we will look at whether is Tesla making money or losing money. So we look at their net income. So net income means that you take all of the revenue generated from the business operations, and then you minus off all of the expenses, which will end up as profit or loss. So here is the zero line. Anything above the zero line is known as profit, and anything below is known as loss. So we can see that from 2012 until 2019, Tesla is actually not making money. It's only starting from 2020 onwards, Tesla is only becoming profitable, which is the reason why the PE drops. Next, we will look at their operating cash flow. So operating cash flow is the cash flow that are generated from their normal business activities. If it's a positive value, that means that there's cash coming into their business. But if it's negative, it means that the company is bleeding money. So here's the zero line. So we can see that from 2012 until 2017, it's fluctuating between positive and negative. But it only becomes steady, positive uptrend is since 2018. Next, we will also look at their free cash flow. So free cash flow means that the cash that is freely available for the company to use after they have minus off the capital expenditure from their operating cash flow. Capital expenditure means that the expenses that the company used to purchase assets that will last more than 12 months. So here's the zero line. So we can see that actually the company does not have much cash flow between 2012 until 2018. They only have positive free cash flow since 2019 onwards. Okay, so because the company was not making money in their early days, then they have to keep on operating keep the business to keep going by taking on debt or borrowing money. So let's look at the debt to equity ratio. Based on value investing methodology, the debt to equity ratio should be less than 0.5. So in a way, it means that for every $100 of the equity, it should be less, the debt should be no more than $50. So we see that this is the 0.5 line, and we can see that from 2012 until 2019 or to 2020, Tesla is actually taking on quite huge debt because it's more than 0.5. But then, starting from 2018 onwards, we see that they are managed to decrease the debt to equity ratio until less than 0.5 in the latest figure in 2021, which is 0.29. So actually what happened? So with that, we will investigate into their annual report to find out. So usually for the debt, on the debt to equity ratio formula, we will look at their long-term debt. And we see that for the past 3 years, they managed to cut down their long-term debt, which is a good sign. But then the next line is that they also have increasing long-term capital lease obligation. So what does this actually mean? Capital lease obligations are actually installment payment for long-term assets, such as offices, manufacturing facilities, and also retail or service locations. So we can see that it's slowly increasing. So for this we will include them. And then when we add them up together, we still see that actually they are slowly decreasing since 2019. And then the equity part of the debt to equity ratio, we will look at shareholders' equity. And we see that since 2015 onwards, it has been increasing, especially for 2020 and 2021, where the increment is very huge, which means that the debt to equity ratio actually was able to bring down since 2017. So we are curious to find out why did the stockholders' equity increase for the past few years. So based on the balance sheet formula, shareholders' equity is made out of capital, which is the money that is invested into the company, into the business, and also retained earnings. So retained earnings are the accumulated earnings or income that the business earns from their operations. And now we'll look at the numbers. So for their capital, we see that the capital has been increasing year on year, especially for the past few years where the increment is quite huge. However, the company was not able to retain their earnings from 2012 until 2020. They only have positive retained earnings in 2021. So with that, that is one of the reasons why stockholders' equity was able to increase year on year. Okay, and next we will look at why did the share price fall when the revenue was missed. So we see that in Q3 revenue, Tesla's revenue actually missed the analyst expectation, but their earnings per share actually beat the expectation. So now here comes the question is that, is Tesla really profitable in Q3 2022? So to determine whether Tesla is profitable, first we'll look at where the revenue is generated from. So again, most of the revenue comes from automotive sales in Q3. And from the automotive sales, 95% comes from selling the cars, but we are pleased to see that the regulatory credits is around 2%. Leasing is still at 3%. Okay, so to determine whether Tesla is profitable, we will look at one of their financial statements, which is the income statement. So we'll investigate whether is it profitable. So these are the three sources of revenue that is generated for Tesla, which brings them the total revenue at 21.5 billion in Q3. So earlier on, we said that this total revenue actually missed the analyst expectation, but when we compare from their previous quarter in Q2, it's actually an increment of 26.7%. And then a part of it, almost 16.1 billion is being used to produce cars and also solar products. And then it remains about 5.4 billion for gross profit. And from here, the gross profit, about 1.7 billion is being used in their operations, such as sales, marketing, research and development, and also some admin expenses. And then 3.7 of operating profit, about 357 million is being paid for interest and taxes. And then it comes down to net income, which is about 3.3 billion. So when we compare from the previous quarter, it's actually increased about 46.8%. So with that, we can say that compared to the previous quarter, Tesla is actually making profit in Q3. So to conclude it all, Tesla has multiple vehicle models that can cater to various demands. And also they have 6 manufacturing facilities worldwide. And they have increasing vehicle production and delivery year on year. However, currently the revenue is rely heavily on vehicle sales. And any negative news or missed analyst expectation will severely affect Tesla's share price. And investors should also take note at how much of the regulatory credit is Tesla selling in order to boost their profit to look nice in their numbers. So with that, this is our update findings about Tesla, and I will pass back to Cayden. Thank you.
Hi, ladies and gentlemen, welcome back to our deep dive series. I'm going to pull out my slides. By the way, just to let you know that if you want to know about the entire electric vehicle industry, is quite a bit of information. So I would like to invite you, right, to go to our channel, which is www.youtube.com/valueinvesting academy, and then you search for this deep dive and a Tesla. Yeah, so we really go deep dive and talk about the entire industry and so on. So actually, it's not so simple, right? Because within the electric vehicle industry, they need certain components to make that electric battery. And so there are lithiums, I think there are cobalt and so on. And to have lithium and cobalt, all these things are ores, right? Minerals, they have to be dug somewhere. And you'll be surprised, most of these minerals are actually dug from China and some African countries. So there's really a huge supply chain of things that are happening before Tesla is able to do what he's doing. So if you really want to know more, please visit our YouTube channel, right, which is www.youtube.com/valueinvestingacademy. Okay. Now then, I think you are supposed to click on this playlist. Yeah, because in that screenshot you can't really find, so you need to click on the playlist. So maybe I show you. I just show you, right? Because otherwise description is quite difficult. Then we'll come to the valuation. So let me just escape Zoom for a short while. And I bring you to that website. Give me a second while I pull up. I think it's better for me to just show you where is it. So I'm going to show you this website, youtube.com/valueinvestingacademy. So I'm going to share right now. You should be able to see our YouTube channel, right? Yep. So we have about 12.6K subscribers. You can see our web address over here. So I'm going to scroll down. There's a lot of stuff, right? Here, Monday Motivation by me, Market Talk. This is a deep dive series, right? Can you see? So in other words, if you want to share this link to your friends, right, you can actually click on it. So right now, I think you can see here 73 people watching, right? Yeah, so if you click this button, you can keep on scrolling. Yeah, so we talk about a lot of things, like talk about banks, option trading, Shopee, which is SEA, you know, and this one TSMC, right? So scroll. And then the interesting thing is when I scroll to the right, you may be thinking, hey, how come I cannot find Tesla? I think that's a weird part about the YouTube. Yeah, that there is no more, right? I think they only allow certain number to be shown here. So what you can do is, can you see this play all? If I click this play all, right? Yeah, of course, this one will be popping up. So you just go to the right and then you start scrolling down. Yeah, you see, scroll down here, right? So there are some old videos which are so-called hidden. It's not really in the front part. I'm not very sure is it our setting or what. If somebody of you know about the setting, maybe you can post in the chat. So you scroll, right? And you search for this Tesla. We even talk about NFTs and all this, Netflix, right? Let me see. Where's Tesla, right? Give me a second. By Twitter. Tesla, I think, is really, really early days. Can you see here? Yeah, so a deep dive into Singapore Airline and Tesla versus new. So this is the one. So you need to, click on the playlist. So the video is 31, right? Number 31. Yeah, so I think they only show like 10 or 15. I'm not very sure the setting, can we expand it to 30 something, but yeah, so this is where the video is. If you really want, you're really passionate about Tesla, right? So let me just go back to the slide again. Yeah. So remember, one of the objective for deep dive is we want all of you to be an intelligent investor. And then during the bull run, there are a lot of YouTubers. Everybody talk about please buy Tesla. Wow, yeah. Yeah, and then I think there's one who said like 95% of my money is all in Tesla, and then he buy Tesla call option. I think it's quite risky. So let's come back to this slide over here, right? Now, let's play a very simple game. There are about 78 people watching this. Maybe I just need the teammates help to do a poll, right? There'll be a poll popping out in the next couple of seconds. Yeah, so when a poll pops out, you just need to ask yourself, do you think? Remember, opinion it cannot be monopolized, right? So everybody can form opinion. So do you think Tesla belong to basket A, where you think that if you buy right now, it's a low-risk, high-return investment, or you think that Tesla is a high-risk, high-return investment, or do you think that Tesla is a high-risk, low-return investment? So the poll should be out. Yep, you just need to click on that poll, right? And then after that, I'll show you the poll results, which will appear on the chat. Okay, so right now we got more people, like 80 people. Just now it was like 30 plus 40. I think some people are working, right? Yeah, so maybe next time our YouTube live, we should do it like on a Thursday. Okay, just wait for the results to be out. Yeah. Okay, give it another 5 seconds, right? Yeah, nobody polling, quickly, just press only. I think you're supposed to go to the chat and then press something, right? Yeah, so I'm going to give you another 5 seconds, 5 seconds. Yeah, if we have done this in 2020 or 2021, everybody would say it's A. It's A, So right now times have changed, right? Right now it's a bear market. Wow. Whether is it Tesla? Yeah, it's a good investment. I think the interesting thing is the share price has dipped. That means if you buy now, you're actually paying at a lower price, right? That's what it means by the share price dipping. And then the company is making money. Yeah, because I think they only make money in 2020 or 2021. But in 2019, there was nothing, right? So it may appear like it's a good deal, right? Making money, and then interesting, you can buy at a low price. Okay, so just wait for the poll, right? Is it out already? Yeah, it's out already. Okay, so the poll is out. Let me just look at the chat, right? Later I'll share with you the valuation, then because this is just for education purpose, whether you buy or not is your own money, right? Yeah. Oh, is it out already, the chat? Yeah. In the chat. Oh, I cannot see. Wait, sorry, let me just close my. Oh, it's in the chat already. Let me just check the chat. Oh yeah, it's out. Okay, so in other words, the poll completed. 22 people vote. So in other words, 9% vote for A. 13. Oh, B is 77%. It's not bad, you are intelligent investor, right? Okay, so let me just share with you my opinion. My opinion without looking at the valuation right now, I don't think it's A. Let me share with you my logic. Remember, this is opinion, it's not a fact because I cannot see in the future. Yeah, I think for one main reason is it became profitable in 2020 and 2021. Yeah. And then right now, we have no idea, the subsequent quarters, what's going to happen, we have no idea. And then there are a few things that could threaten their future profit. Number one, I think is China's COVID-0 policy. Whether will it affect their supply chain, that's also a question mark. And when will China remove this COVID-0 policy? Wow, this is a question mark. And because we do not know, the risks go up, right? And recently, I think I read one article about this company called Foxtron. So Foxtron, what they do is they assemble the Apple. Assemble Apple. I mean, if America is so great, why don't they go and fix themselves, right? Yeah, so they outsource this to Foxtron. So Foxtron go assemble. And then right now, I think somebody kena the COVID, right? Yeah, so the company is all shut down. Right? And then to the company's management, I want to ensure that people stay in the company to continue to assemble the Apple, right? So what they did was they say if they stay back, I think every day they will pay them extra money. Yeah, so, whoa. So I think, who knows whether would it affect Tesla or not. So I think it's COVID-0 policy. Another one that could affect Tesla, right, which is also unpredictable in the future, is the Biden's stand on the semiconductor chip. Because Tesla is an electric company. Yeah, and then they need the computer chip. And then if the Biden, right, doesn't want the technologies to be leaked out of US to China, and then he want to play this game that yours is yours, mine is mine, right? Whether in future will it affect the vehicle, we are also not sure. So there are some things which are uncertain. But let me show you what are the things that are certain. For example, we have a local company called Sheng Siong, right? Yeah, you can be sure that tomorrow when you wake up and when you go to Sheng Siong, the people still queuing up to buy vegetables. Yeah, so I think when we want to make money, we want things with certainty, where the profit is certainty. Yeah, with certainty. So if the profit is with certainty, right, then the price comes with certainty. Yeah, if the profit is uncertain, we have no idea what's going to happen 1-2 years down the road, then the share price will be uncertain. Yeah, so to me, I don't think it's A as of now. Maybe in future it would. Yeah, so mine will be B. B, right? So what does B mean? From Charlie Munger's perspective, if it's B, that means difficult. Difficult to gauge whether can make it or cannot make it. Yeah, so his stand, right, is too difficult, is same as C. It's a no-go. Don't buy. Okay, so B is same as C, right? Now, I leave it to you. That is the framework by Charlie Munger. For me, my take is B. B, Now, let's look at the valuation and see whether does your perspective change. Valuation, right? Preston, I have Tesla stock, but only less than 2% portfolio. You see Tesla, this Preston, I know. You see, want to show off. Less than 2%. Okay. So, Preston, you're correct. So, you know how you did the portfolio allocation, right? Okay, very good. You see, Preston, our grad, he didn't whack 20, right? He whacked 2. So not that bad, the price. Yeah, he can, if you average down, maybe you become 4%. Okay, so let's come to this one. Now, just now, the Hillary was talking about the profitability. Yeah, remember this 1 year. 1 year, this 2020 positive, 2021 positive, right? Ravin. Yeah, Ravin also correct. You see, it depends how we define risk. If the risk define the potential to lose capital, doesn't Tesla much towards profitability make it less risky? Ravin, you are also right in some sense, but the only thing is we do not know the certainty of this profitability. Yeah. And if the profitability is uncertain, right, then that will be equal to risk. Okay. What would be the probability of Tesla going bankrupt? Well, this one you have to go and check the balance sheet. You can look at the amount of cash and how much the cash is being burned. Yeah, so as of now, maybe not because the 2 years is profitable. But if this 2 years is not profitable, it's still losing money, right? Then it depends on the amount of cash in the bank, how much is burning. Now, for example, I can give you one example. You know, like Grab, right? We did this analysis about Grab. Yeah, Grab is not making money yet, but in their balance sheet, the assets part, they still got some cash. So right now, they have to quickly burn cash, and they want it profitable, right? And then the cash deplete, then suddenly become profitable, then the cash goes up. Wow, so it's really anyone's guess. Anyone's guess, But it's okay. So let's go along the line of Ravin and let's see, right? Now remember, 2020 is positive, 2021 is positive, so this dot over here and this dot over here, right? But if you look at their most recent quarter, which is first quarter, Q1, Q2, and Q3, it seems to be doing quite good, So 0.95 plus 0.65 plus 0.95 is equals to 2.55. Now, remember this is only for 3 quarters. 3 quarters. And the 3 quarter is really much higher than this and much higher than this. Yeah, so as of this 3 quarter, it's aligned with Aravi's thinking where they are going towards profitability. So Q4, wow, no one knows. But let's assume that Q4 is 0, right? It will still be 0.21, 1.63, and then it goes up, right, to 2.55. Okay, so right now, whether you want to think whether you want to buy Tesla or not, based on 3 years of profitability, I let you decide. 3 years now, because the lesser number of years, it's like the lesser the dating period, the higher the risk that you're trying to marry this person. Right? So same thing, the shorter the data, right? Well, if you want to buy, you have to think it very carefully. Okay, so that's one way of managing a risk, right? Another way of managing the risk is since the share price has dropped, is it undervalued? Or you want to increase the margin of safety, so they buy such a low price, so that your risk is even further reduced or mitigated. So let's look at the other people's intrinsic value calculation. Now this is by Morningstar. Morningstar's intrinsic value calculation is 250. So right now it's 215. So based on the angle, right, or value, not value investing, Morningstar, right, is considered undervalued. Okay, so this is point number 1. Point number 2, right, remember Morningstar perspective is it doesn't have a moat, or rather it's a narrow moat. Narrow moat, that means a highly competitive industry. Okay, so this is Morningstar's perspective. Now, just to let you know that all this subscription, all this, if you pay for this, you have to be very careful, because right now it's quite popular that people pay like a couple $100 per year, click inside, they give you the intrinsic value and so on. You have to be very careful because you have no idea what's the algorithm, right, that they produce this number. Yeah, and because algorithms are dead, it's very mechanical. They do not take into account about understanding of the company, the qualitative part. So if you whack your hard-earned savings, like you sell your house, right, take a few $100K and buy Tesla because Morningstar says it's undervalued, I think that's risk. That's also another form of risk. Then Guru Focus, right? Yeah, Guru Focus state that the intrinsic value is very high, 371. Oh, this is even much higher than 250. And then right now it's here. Yeah, so Guru Focus is also hinting, not hinting, they blatantly say significantly undervalued. Okay, so you have to be very careful, right? Very careful. Okay, let me just share with you my opinion. My opinion is I never trust intrinsic value, right, that is produced mechanically. Yeah, if you are a VIA grad, we have a VIA calculator. We put various type of assumptions, and then we come and choose which one is most realistic. Okay, so I leave it to you. If you want, you can do a screenshot of this. Okay. Now, so what I'm going to do is I'm just going to share with you something more important. If you look at this, you realize that Tesla is not a goal, right? You don't want to buy, but there are plenty of opportunities. And then I think the lucky thing right now, that we are in is we are in the bear market. Bear market, that means the share price are more depressed. And if I trace back the history of S&P 500 since 1929, after the Great Depression, no bear market lasts forever. It's a matter of time that after every bear, it will be followed by a bull. Followed by a bull, right? And just to let you know that since the beginning of the pandemic, which is 2020, and then followed by 2021, we have been like searching the entire US universe for good businesses that are more predictable than Tesla, and they are still undervalued today. Now, let me share with you the database that we have. Out of 2021 and 2022, right? We have a total of 51 companies. Yeah, and the company is 51 because we are so selective that only out of 3,006 plus, right, we managed to find only 51. And out of 51, some are overvalued, so we didn't list it here, but about 40 are undervalued, which are 78%. Now, our criteria is quite simple. We follow the direction of value investing, where we want to search for businesses with a predictable profitability, and then we want to buy at a cheap price. Yeah, that is what we meant by undervalued. And right now, our database that we have, is 51 companies, and the best part is you can get instant access today, to prepare yourself when a bull market comes. Yeah, because if you don't buy during bear, right, you cannot sell when a bull comes. Now, but let me share with you the challenges, because sometimes it's easy said than done by, I want to buy during bear market. But what are the challenges that any typical investor will face? So, for example, the first one is, if you're watching this, there are 77 people watching this. The question you ask is, do you know where to search for opportunities? Yeah, because opportunities, people always say everywhere, but specifically, where is it? Then the next one is, do you know how to evaluate whether a company is a good or bad one? And just now, if you look at what Hillary has done, there are some technical information. Yeah, numbers are very easy. 1 + 1 = 2. Yeah, but the difficult part is to understand what Tesla is doing and whether do they have a future. This is difficult. This is highly qualitative, and no robot can produce this information for you, which is why Warren Buffett is still using human, right, to try to analyze company. Yeah, so this can be challenging. Yeah, challenging. Then the next one is, then if you know, then where's the entry point and where's the exit point? Yeah, this is also important. Then another question is, of course, regardless of how smart we are, we will never know all the companies in all the 11 sectors in the entire US stock market. It's impossible. Yeah, so that's the bad news, because these are the challenges that we need to overcome, right? Yeah, that includes me. So the good news is, during the pandemic, which was the closest bear market, myself together of team of graduates, we actually came together. Yeah, so that we, each of us have got different superpowers, right? So we're trying to figure out which are the strength and weakness of each other, right? Then each of us take like a sector, yeah, so that we can analyze the company. So these are the team of people that we have, and we even have PhD holders. You can see over here, Dr. Betty Fan, right? Yeah, I think it's Aravin's wife, correct, huh? Yeah, so congratulations, Betty. I think if I'm not wrong, she recently just have a kid, right? Yeah, so we are very close to them, and all these authors follow a framework that's been around for the past 102 years old, and this framework is simply called value investing. And of course, within VIA, we also have our own framework, which aligns with this 102-year-old value investing framework. So let me show you what our team of superhero authors, what are they doing. So the first thing, right, they will search. They use screeners to search for companies, yeah, so that eventually you want a business model that's predictable. So that's number one. Number two, they will evaluate for you, right, to see whether the company eventually is it a good business or a bad one. So that's number two. Number three, we want you to buy the company as cheap as possible. Then to do that, there's a bit of technical things, right? So we need to calculate the intrinsic value. Then ultimately, like what Preston was saying, you see, Preston is very intelligent, he's very young. He said that Tesla, he only buy 2%. So it's very important that A, which is the asset allocation, right? We cannot like whack 90% of the Tesla. This is quite risky. Yeah, maybe I'm too old for this. Some people can, but I think it's too old for me. It's quite dangerous. So the entire team will do all this SEGA for you. Yeah, so that eventually tonight, right, if you have a username and a password, if you click on this button over here, when you log in, and then you click under these sectors, right, you will see all the undervalued companies in all these 11 sectors. You can choose any one that you like. For example, like materials, maybe it's something interesting. Maybe is there energy here? Okay, let's say healthcare, you're interested. You can choose anyone. Choose anyone. So everything is on one click. When you click, the whole list of companies will pop out. And you can also click on undervalued companies. If you click, the whole list of companies will pop out. And you can scroll up and down. So of course, I blocked the rest, right? Yeah, don't want to let you see, right? Yeah. So BBSI, Barrett Business, is one company that I've invested. And this database also have some companies that I'm interested. But of course, I won't tell you which one they are. Yeah, but also from here. From here, right? Yeah. Then the next one, the best part is the moment you become our subscriber, you are like our insider, right? So being part of our insider, we meet regularly. In fact, I think yesterday we just have a gathering. Yeah, gathering. So every gathering is in fact a mentoring session. What do I mean by this? We do it 4 times per year. So what do we do during this mentoring session? Is 2 of our authors will share the company's update, just like Hillary sharing the updates of Tesla, but it could apply to any other company. Yeah, show 2 updates. And then the fundamentals of companies sometimes occasionally change. We will also update the intrinsic value for you. And then the best part is you have a chance to have a Q&A with the author. Because otherwise, if you watch, it's just you alone, right? Yeah. And of course, the most interesting part is this part. Now, if you are a graduate, you know what CFOS, right? Which stands for Cash Flow Option Strategy. Now, right now, during the bear market, there are some people who say, Cayden, my stocks are stuck, because the share price dropped, I don't know what to do, right? Yesterday, actually, I showed them 6 ways, right, how to deal with stocks that are so-called inverted commas, they are stuck. Yeah, and that will only happen in our mentoring session, in our VIA US case studies, right? Yeah, and this part for yesterday, I also shared about 8 option selling opportunities, yeah, where all of us, me and you, we can get instant cash. No waiting is required, instant cash, and I shared 8 opportunities. 8 opportunities will last us for at least a quarter. Yeah, so what does 8 mean, right? 8 means if I times 4, right, the entire year you have 32 option selling opportunities. And of course, if you have any question, you can always ask me. And the best part is our next mentoring session is going to take place on the 16th of February 2023, which is a month after Chinese New Year. Yeah, which also means that if Ravin say, just on Sunday, congratulations. Yeah, Ravin, congratulations. I'm not very sure, is he a baby boy or baby girl? You can type in the chat. So congrats. Yeah. So finally, Ravin is a father. Yeah. By the way, if you are watching this, Ravin is also a PhD, right? Yeah, so two of them, they are all very intelligent people. Yeah. So of course, if you're not our graduate, you'll be thinking what Cayden is talking about. So there is a tab over here, bridging course, right? When you click here, this list pops up and you can attend our online training, which is pre-recorded, high quality video, very simple, very fun, and at no cost. Yeah. So these are the things that we, baby girl, okay, very good, like my two girls, Yeah. So this is the video, like for example, how do you know it's a good business? All the videos are about maybe 3 minutes, 4 minutes, so it's easily digestible and you can learn while you're traveling, right? And this is the most exciting thing, is if you click on this, which is a one-page directory, the moment you click, you have the whole list of that. Remember I talked about the 51 companies that we have? Yeah, and 40 companies, 70%, right, are still undervalued today. Right? And the best part is you have instant access. Yeah, so if I may summarize, now that is what we have today, right? So that's the past. But we also want to help you and support you moving forward. So let me just share with you what are the things that we can do for you, right? And you just need to leave one finger. Okay, leave one finger, right? So moving forward, every single month, right, myself and the team of authors, we will deliver, right, two companies for you. Yep, it could be companies that we've done before, but as much as we can, we want to deliver fresh, new companies. So now moving forward, you have 24 companies done for you. Value investing style. No speculation involved. Yeah, so this could deliver a value, right, of about $5,000 value to you. So that's number one. Number two, being our insider subscriber, right? Yeah, we also, Cayden, we is actually Cayden. Yeah, I also share with you some of the advanced CFOS strategies that you can double your ROI. So 1 month, I think we can have oh shit, my computer went off. You see whether is it off? Oh, is it still Zoom? Is it? So my computer is still off. Okay, so ladies and gentlemen, my fault, right? Suddenly my laptop went off, but let me just continue. Shouldn't be affected by this. Yeah, so let me, just now, where was I, right? I was talking about the system and so on. So make sure that my teammate, make sure that my slide is all up. Yeah, and just now it's all here, right? Yeah, so these are things, the mentoring session will be on the 16th February 2023. And then if you click on this link, right, you will see all the bridging courses, especially for those people who are not our graduates. And if you are a graduate, you can also revise, right? Just now I was here, right? Then suddenly the exciting part, the electricity goes off. Now, so remember, today you have access to all the 51 companies that we have found. Remember, all these are carefully selected from 3,600 companies that we have, and 40 companies are still undervalued, and you have instant access today. Yep, so these are the things that we will share with you. Now, this one is really priceless, right? This is really the insider gathering that we have, the mentoring session, where we share with you step by step on how to do it, and every opportunities, every mentoring session, we will have 8 option selling opportunities. So 8 times 4 sessions per year, right, will be 32 times. Yeah, that's the amount of cash we can generate by clicking 32 times. So these are the value that we're going to provide. Just the first one alone, the value will be $5,000. The second one plus the third one, about $6,000 of value, right? Yeah, across the past, across the future 1 year. And then in case you're busy, you cannot watch the entire 40 minutes of analysis, there is also a 1-page summary report. So just click on it. You can also have the 1-page report. And so right now what I'm going to do is, before I go into more detail, I think it's important for us to share with you what is the take, right, for our subscriber. So just get ready the video, right? Julie, can you just play the video for Julie, please? Thank you.
My subscription fee, I get it back within 1 to 2 clicks. Okay, I'm Julie. I'm from VIA Graduate Batch 31 and I work in a healthcare company. The reason why I started to subscribe to the US case studies is because of time. I realized that we need a lot of time in terms of doing the research, the filter, the analysis. Sometimes it's very difficult and very tricky. And it's not just as simple as 1, 2, 3. If we have a team who can actually do a good job in doing all these things and monitoring them, why not? It's less than a proper 10-course dinner or a dinner that me and my friend are going later. It's like, or lunch or high tea or whatever. And you have a peace of mind, you know that these are the value companies, and you know that this can be part of your portfolio. US case studies is not just about presenting the 1 to 24 studies, 2 studies a month, and then they will forget about it. If you realize that they actually go back to reanalyze some of the case studies that they have picked up before, and then review again, is the fundamentals still there? Are they still earning? Do they still have good management? What have they done for the past year? Have they met the criteria or the promise that they say that they're going to meet? Now that I've found out this value investing part can be part of my portfolio, right? Let's say 25%. I have the other 75% that I need to look into. But I know value investing is important, it's the fundamental, it's the base, right? But once I found out this time that I don't need to do or search the world, for the companies, which I know that a very dedicated and very good team will do that, I can actually use my time for other things. Other than venturing into other types of instruments and investing, I also have more time for my family. I do not want to sit there and search for things, rather than sitting down and looking at, what is the company to invest tonight. ROI that I gain from value investing and plus CFOS and the US case studies is about 15 to 20% per year. And it's like 1 to 2% per month. After subscribing to the US case studies, it's very structured. These are the companies that has been picked up and searched and researched and analyzed by a dedicated team with all the knowledge that they have to make sure that it's really a value company. So after that, it took me only about maybe half an hour to 1 hour. So these are all the benefits that I have because I don't have to worry. It's like a peace of mind. I don't have to worry about is the company good or not? I know that the US case studies, all the company will be value company. But whether I want to invest in them because it's value company is my due diligence.
Okay, ladies and gentlemen, welcome back. Just to let you know that Julie, I think it should be one of our early subscribers who have really greatly benefit from it. From the things that we are doing for them. For example, the first one, 24 case studies, moving forward, the regular meetup that we have, our insider gathering meetup, the summary in case she's busy, she's also a professional, right? She can read all the report. And of course, like what I say, we still have a database where you have instant access today. And remember, all these companies are all done for you so that you really just leave a bit of finger by logging in, right? So as of today, tonight, right, we have 51 companies and then 40 are still undervalued today. Now, if you add all this up, the possible return is quite humongous. See, 24 companies plus 51, right? Let me just write it down. 24 plus 51, we have a total of 78 companies. That's a lot of companies that we have done for you, in the past and moving forward, right? So if I put all the value together, the really a very conservative ROI, maybe it's about 7,006. 7,006 actually to me is a very, very small amount. The approximate, because my account size is quite huge. So if you decided to gain access to all of the companies that we have today, in which some are quite superior than Tesla, right? The monthly subscription in the past is actually about 136. 1 year is about 1,006. But in view of the times are bad, bear market, right? So we are going to give you a special discount just for tonight only, where the subscription is just a mere 888 for good luck, 88 for good luck, right? So if I take this 888 divide just by 51, each company, right, is about $17. But remember, we are still giving you another 24, right? So if I take this further divide by 24, one may cost around about $10. So in other words, $10 is your investment. So that's your investment. So I'm quite sure out of every company you can make many times out of $10, right, with a 1 year time period. Okay, a 1 year time period. So I'll need my colleague, right, to just post the link in the chat. So that is the link you should be able to see the link in the chat. So home.vials and so on. So for those people, if you don't want to really, how should I say, think too much, right, like Julie, and you want to outsource the work, farm out the work to a team of committed people like us, right? The link is over there. You just click on this link. Now, and then the best part is the second year, right? There's also we also give you further discount, like a loyalty discount. So instead of 888, will be 735. So when you click on the link, something will pop out. A new browser is going to pop up. You just need to fill in your name, your email, and the necessary information that's being stated here. I think it comes with a 30 days money back guarantee. Or 2 weeks. But there's some form of money back guarantee. So you just fill in all the information over here, and then once you submit, now just take note, once you submit this, right? You will receive an auto-responder, like auto email, and the email is from our platform, right, called Katra, right? K-A-R-T-R-A, Katra, and this one will go inside your inbox. Once you fill in all the information, you submit, right, you go inside the inbox. Now, in case this one go inside the spam, right, please check your inbox and the spam. And if you have any question, right, I'll just need my colleague help to put the email address so that if you have any question, you can email him directly, because he's actually here with us. We have a couple of people in our office, right? So these are the things that we can do. Maybe let me just repeat this one more time, right? One more time. So remember, tonight, once you fill out a form, you submit, you will have access to this immediately. So this one, so that's point number 5, right? Then moving forward, every single month we will deliver two companies for you. So that 1 year is 24. So it's 24 plus the existing of 51. Then we will meet every quarter. In the entire Singapore, actually, we are the only one that's doing this. The one that is really priceless is actually item number 2 and number 3. Where you have a chance to, it's like every 3 months there's a training, But it's actually not a training. Rather, we give you the 2 company updates, which are very priceless. And sometimes, like bear market, right, you also want some thoughts what to do with your some old stocks, right? They got stuck and so on. What are you supposed to do? Yeah. And there's another interesting thing, if you are our graduates, it's the CFOS, you know. Yeah. So I shared what are the strike price that you can select. Yeah. What kind of ROI you're going to get, which kind of expiration date you can select. So it's that kind of precision. Yeah. So every single month, I think for one company, we want to have at least 1%. So that 1 year you can have at least 12%. And if you use the advanced method, right, over here, I think 1 month instead of 1%, it can be about 1.5 to 2%. Then 1 year, it may be about 18 to 24%. Yeah, so that's quite substantial, right? And of course, with that amount, I think should be able to cover one company $17. More than enough. Okay, so the link is already there, and my colleague Alex has also put in the email, right? Yeah, so remember, click on the link, just fill out all the information over here, and you have instant access. And you know, I shall see you in February. If you have any question, please feel free to drop an email to Alex, and I'm very sure Alex will follow up with you. Okay, so with that, yeah, registration is open now. Maybe I will put a 10 minutes timer, right, for you to register. And if you have any question, please feel free to post in the chat. Yeah, post in the chat, right? Yeah. Oh, by the way, at the same time, if you don't mind, can you just help to press a thumbs up, right, for our video? Yeah, just to let you know that just tonight we have how many people? We have like 2, 4, 6, 7. We have 7 people, you know, just to do tonight's this deep dive. But there's actually quite a bit of work, especially the slides, you know, the Tesla, you know, the details, and so on. Okay, any question that you want to ask? So I think I'm Aravi is the only one that chatted with me, plus Preston, right? Okay, any other things that you want to ask before we enjoy our weekend? Yeah, weekend. So remember, click on the link, something pops out, fill up all the relevant information, and I shall see you in February. Okay, any other question that you want to ask? Yeah, I'm looking at the timer right now as well as the slides. Yeah, so I have to tilt my head to the right, because the YouTube live is on my phone so that I can see. Yeah. Okay, maybe there's some time left. Maybe I just chit chat what has happened yesterday, right, during our gathering. Let me just go back to this slide. Maybe some of you take some time to fill up the information, right? Yeah, so yesterday we have this, okay, maybe I exit from here because a lot of scribble, right? Exit from here and then I'll share my slides again. Yeah, and then I'll go back in again with a cleaner slide, right, over here. And I'll put it back up. Yeah, so this is a slide that I've shared, excluding the scribbles, right? So what happened was yesterday, I tell you what happened yesterday so that you know what is the value to you. Now, during the bear market, people are always concerned about companies where the share price fall, right? And then they do not know what to do. Should I cut loss? Should I buy more? Yeah, should I sell some? Should I sell call options? Should I sell more put options? So there are a lot of questions. And if you're not with a team of people, it's really hard. It's really hard. So we are here to help you, and we meet regularly every quarter. So every quarter there are always updates. And here, right, let me just highlight this. So every quarter we meet and we provide 2 company updates. Yeah. One of the company that we did previously was Alibaba. Alibaba share price really dropped to a new low of about 60 plus, right? So we provided the company updates for Alibaba. Then yesterday we talked about 2 China companies as well. Yeah. So this is an update, right? Then after that we go for a break. Then during the break, after the break when we come back, right, I'll talk about some of the option strategies that I personally use. So like I say, I will provide 8 CFOS opportunities. So every quarter is always 8. Every quarter is always 8. And it will be followed by a live session, right, on how to sell options based on the existing case study, plus the 2 company updates that I talked to you about. Yeah, so this one. And of course, we also merge with this, right, during the how to sell options. I also talk about some advanced CFOA strategy, right, that you can double your ROI. Double ROI, like I say, every month about 1.5 to 2+%. 1 year it can be 18 to more than 20%. Yeah, so this is really priceless, and we are the only one that's doing it. Yeah, this one, right? Then, of course, some other things that are priceless are the existing research that we have done. Yeah, because if you have money right now, right, you do not know what to do. You need all the research work that's being done for you. So you just need to log in with one finger, just press, so you can see the list of companies. So existing, right, we have 51 companies, and then 40 are still undervalued over here, huh? And then, of course, moving forward, every single month we also deliver 2 companies for you. So these are the things that we're going to do for you. Remember, it's the entire 12 months, 365 days. Yeah, and then you just chill. You just chill, huh? And just now, of course, you have watched the testimonial by Julie, right? By Julie, huh? So if I take 888, right, divided by 51 companies is only a mere $17. And if I further divide it by another 24 companies that we're going to deliver for you, right? That's even cheaper, maybe about $10 or so. Yeah, yeah, $10 for one company. I think that's a value for money, right? Value investing, right? Yeah. So again, the link is really out. In case you cannot see the link, you just need to refresh your browser, right? Refresh your browser and then click on the link, key in the relevant information, and I shall see you in February then. Yeah. So we have about maybe 5 minutes, 4 minutes plus. Yeah. Any other question that you want to ask? Yeah, maybe I ask you, you got any companies that you're stuck? Like the share price is low, right? You don't know what to do. Yeah, anyone want to tell me what are the companies that you got stuck, don't know what to do? So we have 37 more people. I think quite a number already enjoy the weekend already. Okay, we have about 4 minutes more. Yeah. Oh, recently, SIA, which is a Singapore airline, right, doing quite okay, huh? Doing quite okay. And then the management announced that they are going to pay out dividends. Yeah, there are some people like SIA, and they've been waiting for the company to be profitable for a while. I think the share price have gone up. So SIA. Then, but between SIA and the DBS Bank, I think I still prefer DBS Bank. Recently, their profit, I think, has risen by 38% or something like that. Yeah. So if you compare the certainty, right, of the profitability of these two companies, DBS versus SIA, I think DBS more predictable. SIA is really high capital intensive. If the plane don't fly, right, or rather the plane only got 1 or 2 people, they still have to fly. Yeah. And then there's a joke in the world of value investing, right? If you want to become a millionaire, become a billionaire and buy an airline. Yeah. So previously, before the pandemic, I also don't know why Buffett went to buy airline. Then I think eventually he, being a number 1 investor all time, he also lose money, right? So he cut loss on quite a number of airlines such as Delta Airline and so on. And then he sold away all the airlines. Right now, he's not holding on to any airline company. Yeah. Lucky I didn't follow him shamelessly, right? Well, otherwise I'll be in trouble also. Yeah. So it's quite important for us not to just blindly follow, like whether is it Buffett, whether or even this YouTube session, right? But we need to understand what is it, which is why we want to explain terms like PE ratio, earnings per share, and so on. Okay, so we have about 2 minutes plus more. Any other question that you want to ask? Since I'm here, right? Yeah, so 2 minutes more. Any other question before we end the session? So the link is already there. Yeah. Interestingly, for Friday, usually there are today not many people are watching the YouTube. Like usually it's about 100 plus, right? So today significant lesser amount. Yeah, maybe it's a Friday, you know, people want to go out, hang out, and so on. So maybe next time we should do it on a non-Friday, right? FBC merger, what's that? maybe you can ask the question within the PNWA closed group. Yeah. Oh, by the way, since we are on Tesla, right? Elon Musk has already privatized Twitter. Of course, recently the news is about him being a Thanos, right? Snap, and then he want to fire, I think maybe half of the company. So he's a real life Thanos. The interesting thing is, within our training, we have our internal closed group, and we talk about this strategy called arbitrage, right? Where you can buy a company that already will be acquired by somebody else. Yeah, so Twitter is one of the companies that we have spotted. Yeah, spotted. So there are many ways to really make money, right? But of course, we must know what to do, which is why the US case study will really support you. Yeah. So just maybe about 40 seconds more before we end our session. By the way, the video will be permanently here. Please feel free to share this video with any of our friends. Your friend are hardcore Tesla fan, right? Yeah, this could be. Jen said the meetup quarterly is face-to-face. No, it's via Zoom because the subscribers some are overseas. Yeah, overseas, right? Yeah. Hillary has to update the arbitrage cases. I think every Monday and Thursday. Hey Jen, you know, right? We met at barbecue, right? Yeah. So the quarterly meetup is online, and then subsequently, in case some of you, you're not free and so on, because it's recorded, right? It's recorded, so you can go back and rewatch. So in other words, like for example, Jen, right? So once Jen become a subscriber tonight, she can go back and watch the recordings that we have for yesterday. Yeah, so that's the importance of online. Yeah, on site, very difficult to record. Okay, right. So I think time is almost up. Jen, do you have any specific question regarding this? But you're with us, right? So this amount is really a very small, almost insignificant amount, and you know the quality of our work. Yeah. So remember, the email is alex@mykinesis.com, right? In case you have any question, you can also, Alex, maybe you can type your email one more time, right? Yeah, you can also ask Alex. Past ones okay. Past one, you're saying about the past companies, is it? Maybe let me just refresh my slides again. Past one, yeah, you have our database. Let me just share the screen one more time, right? Yeah. So Jen, specifically about Jen, maybe some of you also have this concern. Maybe I say it one more time, right? Now, today, let's say Jen, right? She clicked on the link, fill out the information, an email goes inside her inbox, right? She with the username and password, she can immediately access. Okay. And then when I say immediate access what, right? Access these past bonus companies that we have done for you. So there are 51 companies plus our gatherings, the CFOS, everything is all inside. And remember, out of these 51 companies, 40 are still undervalued today. Yeah, so this is what Jen and all of you is going to get today. But of course, moving forward, right, you have these 24 companies. Moving forward, we'll meet quarterly online so that in case you're not free, the session is also recorded. And of course, when I say here summary report on a slide show all this, this number 4 and number 5 is together. Yeah, together. So our past companies, all the data they have are accessible tonight. Yeah, once you click on the link, fill out information, and then you submit. So we still have the 37 people. Jen say okay, sign up liao. Yeah, then Jen, I think you also do some technical analysis, all these, right? So you can make use of the information over here. Yeah, I can see Jen's one already in my inbox. Yeah, Jen, anyway, I see you quite soon. Yeah, the December we have this Christmas gathering, right? Yeah. For the rest, any other question that you have? So what for Jen, right? Jen is our grad. She knows the quality of work that we're doing. Alvin say too much case study, too little capital. Oh, Alvin, you just need to. You're saying this 51 is too much, is it? Yeah, it's a buffet, ma. So the buffet, you don't have to eat all the dishes. You just need to pick 1 or 2 dishes, right? Maybe let me just scroll back to see so that you don't have to. Yeah, actually, it's a interesting. You know, like buffet is too much, then a la carte, you know, and so on. So let me just show you this. Let me just go back over here, right? Yeah. You see, let me show you what I do. Here, right, under the sector, if you click once, there are 11 sectors. Yeah, but I'm not a guru in every sector. So we can focus on something that we find that is quite easy to understand. Like, for example, I find consumer staples. You know, like supermarket, all these are consumer staples. Amazon, all this, I think it's consumer discretionary. Yeah, so some companies that you more or less know what they do, you can just click on it, right? Yeah, you can just click on it. Once you click on it, you know, you can see all the videos, all the research that we've done. So it's as though when you click on it, it's like Hillary talking about the company and so on. So this is one way you can search for information. But of course, if you do not want to go by sectors, right, you can click on here. Then there's a whole list. Whole list. Yeah, interesting. You don't have to see all. Yeah, you know, like Netflix. Netflix, right? You just need to search for one where the name sounds quite familiar to you. Yeah, and then you can click on the summary report first. If the summary report is something that you don't know what it does, then you give it a miss, then the next one. Jen Lee say on holiday cannot go for Christmas. It's okay lah. We are here. We are Singapore celebrating Christmas, but you're overseas. You're more fortunate, right? Okay. Any other things? Alvin, is there any other question from you before we knock off for the day? Yeah, so remember Alex has put his email over there, right? alex@mykinesis.com. Okay, if not, we're going to knock off. Sure, right? Alvin, any question? Okay, sure. Yep, the link is up again. Okay, if not, yep, we shall end the session. So the link will be there. I also can't make it for the Xmas gathering working on that day. You see? That's why I must be financially free. Wow, I work on Christmas. Wow. Ooh. Okay, then you must become our subscriber. Then next year, Christmas, no need to work. Okay, but just aside, yeah, I'm quite sure you'll be compensated in some ways, off day or whatever. Alvin. Okay, so we're going to knock off for the day. The link will be there permanently. Yeah, so just click on the link. Again, fill up the necessary information like what Jen has done. And I shall see you pretty soon. Yeah, in our next mentoring session in February. Okay, with that, remember, I must do the closing, right, with our slides. Yep, so remember we are VIA, and VIA stands for Value Investing Academy. So all the deep dive that we are doing, including the subscription, all this, our intention is really we care to make you a better investor. So have a good weekend, and I shall see you in our next deep dive series. Okay, goodbye.